you here, David? Everyone can hear me okay? Good? Wonderful. Thank you very much. So we're going to go ahead and get started. Don't know, DB, if there was anything that you were interested in saying this morning, but otherwise I'm going to go ahead and get started. I mean to catch you off guard. And look at that. Yes. Real quickly,
I just wanted to mention one thing. I apologize. I had a lot of emails this morning from people who couldn't figure out, I guess, where the test had been placed. That's my fault for not making this clear yesterday. I'm going to post a link. Everything that we do during this course is going to show up on your course homepage. So if you'll navigate to that link, you'll see that everything from the course glossary, bonus video content, all the daily recordings, and any assignments and tests are going to be posted there daily. So just so you know, moving forward, and you don't have to send an email every day asking where something is. 9 times out of 10, you're going to be able to navigate directly to it just by going to your client portal and going to the course homepage. That's all I need to say. Thanks, Mark, and I'll hop off the mic.
All right, thank you. And I will send DB this morning the homework for tonight, as well as templates for you to use in your homework and throughout tomorrow and Friday as well. Real quickly, before we do get started, because there were quite a few questions yesterday about it, this is the overnight session. This is the overnight profile right here. Make this as big as I can. And some of you yesterday were asking me, could you show me an unfinished auction on the profile? This is what an unfinished auction on the profile looks like. Can everybody see this bar right here at 1903.25? See how that's, normally we're looking for this nice taper, and then at 1903.25 we got that little pop of volume. Can you see that? Okay, good. What this is saying is that this, at least this area, is likely at some point to be revisited. It doesn't need to be, but with this little volume pop right here, and then price moving back up, because it hasn't been revisited since that volume pop. With this volume pop, what the volume profile is confirming, and is likely, let me just go back to the print and confirm it as well. And this is, as we start looking at how to pull these things together, this is going to be a good example of how to pull these things together. And there's some of you who were interested in trading in the overnight and had questions about that. So there were a lot of things that kind of came together here. So right here, where this little volume nodule is at 1903.25, it just, even forget the print right now. You can see more volume at 1903.25 than is at 1903.50 and is at 75. We don't get that much volume until we get back up to about 425, 4.25, 450, right? If this was additional aggressive sellers that was creating all this volume, then price would be somewhere down here. What this is telling you, this little nodule, is that there was a lot of aggressive selling and that buyers held that selling. Buyers held right here. That is the only way that we could get this volume, this much volume in that short amount of time. So that's kind of the story behind it, that this little nodule tells you that, and then price movement tells you that buyers are holding. So this is a pretty important level, 1903.25. And when I said in the messaging that this doesn't look finished to the downside, this in the profile is what an unfinished auction looks like. Now, like everything else in trading and everything else in the market, does that guarantee us that price is going to come back to that point? No, it doesn't. However, In my experience, what this is saying is that this is likely to be revisited, though it's not a guarantee, especially in the pre-market. And this also starts to talk to, because if you look at when some of this started happening, 532 a little bit earlier, there was an effort here by some larger time frame participant that did not want to see price moving too far down beyond 1903.25. So that is kind of an odd time and an odd place. And if I go back to my other chart, this little simple chart that I talked to you about yesterday, just a 1 minute volume chart here, right at this same time, remember I told you these volume spikes, because it's a relatively small amount of time, a lot more volume, aggressive volume to the downside. It's the only way price is going down. And then look at this right here. This was what, 4,300 contracts in a minute at 6:34 a.m. Eastern, 5:34 Central a.m. Central. That is well ahead of when we normally see the U.S. market start to step into the ES. That was a considerable amount of volume at that time. And this is what created, so everything is lining up, this is what created that little volume nodule. And what this is telling us is, again, there is no way this volume could exist if this was continued aggressive selling. Because all of this continued aggressive selling, and there's no way that this could exist if there wasn't aggressive selling, because buyers had to hold all of that selling and then start moving price back up. So this is what an unfinished auction looks like. But what this market is saying right now is that there is a significant interest down here at 1903, 1903.25. Does it mean that price won't go lower? No. But what I can tell right now as I start developing my story for the ES in terms of getting context is that I know that there is a significant participant down here that sees value higher than 1903.25, 1903. Again, what it doesn't mean is that price won't continue to go lower, but until that changes, there is a significant participant here that that believes that there's value higher. So at or sometime after the open, if price does test back down to this level, I'm going to be very, very interested in seeing what happens at the print right around this area. I also talked about the fact, and I briefly touched on this yesterday. I don't expect anybody to remember this. I briefly talked about it. Right now, the VPOC of the overnight is at 1906. There is a long-term low volume area at 1906.75. And one of the things I said yesterday, it's kind of a general rule of thumb, and I gave this specific example. When the overnight VPOC is sitting around near a long-term significant low volume area, the probability at the open is for a very volatile, choppy open. So what this scenario with the buyers stepping in here and with this VPOC 3 ticks away from a long-term low volume area tells me that the open today is likely to be volatile. So it tells me that at the open, my best course of action is to sit on my hands and watch how this auction develops. Now in the overnight, as price came through this level 1909, it created a low volume area. And you can see from a price standpoint, for those of you who are interested in trading the pre-market, you can see how this continues to work. So remember that the low volume areas are unfair highs and lows, right? So price is coming down. Remember all of this, this price distribution, you can see this nice bell-shaped curve. Get to my drawing tool, I keep forgetting I have that. We have this nice bell-shaped curve, but that wasn't there prior to price coming down. When it broke through this level, it started building out more volume. So as price breaks through a low volume area, and trust me, we're going to go through this again. As price breaks through a low volume area, if this was going to be just a stop run and price is going to pop back up, what we would have seen is a low volume area, some additional volume, and then a quick taper. And then price would have popped right back up. And that would have told us we would have seen zero or very weak print at the bid down here. We would have seen strength at the bid right into some significant weakness. It would be a stark, in fact, here it is. Right there. Pretty significant strength at the bid, right into some stark weakness at the bid. A pretty good example of a stop run or the other side stepping in pretty harshly to move things around. So I wanted to show you this unfinished auction. Again, I want to be real clear. It doesn't mean that price is absolutely going to come down here. Remember, what we're in the process of is transitioning from our overnight market into the RTH session. There is a significant difference in volume between the two sessions. And so what I really start to care about is this starts to provide an area of interest for me. And if price tests back down here in the morning, I'm still sitting on my hands. I want to watch and see what happens with buyers and sellers. I also want to watch and see what happens with buyers and sellers right at this level here at 675, because that's a long-term low volume area. So we have a lot going on here this morning. Our overnight volume profile shows the VPOC of the overnight, the volume point of control, the most fair price in the overnight here at 1906. I can see evidence of a pretty strong buying holding back this continued move to the downside. And then another low volume area here at 1907.25, which is still very close to my long-term low volume area at 1906.75. So all of this tells me that the high probability at our open today is for a volatile open, meaning price likely will move dramatically up and down. And it's not something that I want to trade in. So it's kind of an early warning sign for me. And even if the market opens and it just shoots up or shoots down and is very specific in the direction it wants to go, and let's say it gets up to this 1909 and moves down 5 points, I don't care. I really don't care. I've experienced this enough to say that this combination, when this happens, that I want to stay out of the market. I want to stay away, because what I typically experience more often than not is a sharp move down followed by significant responsive buying, followed by responsive selling, and you get this whippiness, this volatile open. So I wanted to go through that because honestly, in the next 2 days, I don't know that I would have another opportunity to share this as a live example with you. So I wanted you to see it this morning. How is that endemic of a stop run in particular? Just real quickly, in terms of stop runs, there are two things that I look for. I'm looking for, first of all, a low volume area, a key level, and that could be just a simple rotation. Let's just say I'm looking to go long. at, just using this as an example, at 04 and a quarter. And I go long at 04 and a quarter because it's a key level. When I see this in the print, strength at the bid, a lot of strength at the bid into pretty stark weakness, and then price pops right back above my key level, that is very much indicative of a stop run. And they took out the stops below and popped it right back up. So in those cases, I get in, I get stopped out. Whenever I see that pattern, and in the profile, there's a very quick little volume area with a taper. You know, let's say this just goes down quickly like this, and it pops right back above that key level. That is a stop run, and I would get in long again. Again, not everything is absolute. Nothing is in trading, but those are that is the print evidence to me of a stop run, and the evidence in the volume profile. Yep, you're welcome. All right. So anyway, again, I could not even imagine having another opportunity to share that with you. So I'm really glad that that came up. And we'll take a look. I want to mark the opening swing for you this morning. So when the open occurs, we are going to jump over to this chart, and we're going to mark the open, and we're going to mark the opening swing. I'm going to show you how I do that. Well, hopefully after I show you the opening swing today, it will help. Now that's going to be in 12 minutes, so I'm going to get into some of the content here, and I'm going to watch the clock, but you can also remind me when it's coming up. All right, a couple of things I want to go through, just a review of yesterday in about 10 minutes here. There are 4 volume tools that I use in this course, and I primarily use to trade with: the volume profile and the print. There's a composite volume profile, and composite just means multiple time frame, several days, weeks, months, etc. A short-term volume profile, usually I'm talking about a day, but that can be a 5-day. And again, as some people might call it a micro composite. Micro composite just means we're putting days together, but it's a small number of days. But a short-term volume profile, usually intraday, but it can also mean, and I'd be very specific about it, you know, if I'm using a 4-day profile, I would tell you that, but I would tell you why I'm using a 4-day profile. Volume over time, you can see I use the 1-minute chart, the 2500 volume chart, as opening and closing swings. And again, that's only for the ES. And then the 4th volume tool, and without question, the most critical relative to the moment of truth, which is my trade, is order flow and the structure chart, along with volume cluster and momentum analysis. There are 7 elements of every volume profile. It absolutely doesn't matter where you draw the volume profile, what instrument you draw the volume profile on. It just doesn't matter. All of these 7 elements will be a part of that volume profile, which is volume bars at price, price distribution curve, high volume and low volume areas, volume point of control, value area, and the finish on either or both sides of the top and bottom of the auction for any specific point in time. And when you come to understand these elements, you will automatically start looking for these things. For example, when I look at a volume profile, the first three things that just absolutely jump out at me, and I immediately either mark on the screen or make a mental note of, is VPOC, low volume areas, high volume areas, and then that price distribution curve, or really the structure of the volume profile. And then I'll look at value, and I'll look how the profile is finishing on each end. But those three things, high volume, low volume, volume point of control, in any volume profile. In fact, I could be looking to trade options on a stock, and I'll look at a 3-year, 1-year, 6-month, and 1-month chart. And what I'm looking for is start lining up high volume, low volume areas. And it really kind of depends upon if I'm looking at a weekly option or a monthly option, what my time frame, my minimum time frame is going to be. But I'll do the same thing every single time. So those are the 7 elements. We've got 7 minutes. I'm watching the clock. Volume bars at price, just a couple of things about those. Every transaction at each price is recorded and represented as a single volume line. Pretty simple. The more transactions, the more prints at a price, the longer the line. The fewer the transaction, the shorter the line. Now remember, what this is doing is taking all of the transactions at price. It doesn't matter if it's at the bid or the offer. And what it's saying is participants are most willing to enter. And this is very consistent with OFA when you think about what volume cluster analysis is, and you're looking at where does price, or where do participants, not price, where do participants enter the market? Because that's saying something about their conviction level. Where do they enter the market? And what the volume bars at price is doing is saying, here's the level of interest at this price, this price, this price, where people are entering, and I guess it could be closing positions, but if somebody's closing, somebody's opening, here's where they want to do business at these different levels. So the fewer the transactions, what that's showing you from participants is that buyers and sellers don't really want to execute trade at those areas. The more transactions, it's telling you this is where buyers and sellers feel comfortable, more comfortable, because they believe they can make profit, and profit is why people trade. They feel more comfortable in getting in at those prices. So pretty simple. All right, price distribution curve. This gets into the structure of the volume profile. It's not often you're going to see a perfect bell-shaped curve. You've got to draw that out. What you're looking for is a VPOC somewhere, of course, within value. VPOC, you're looking for some level of taper to each end, but in a volume profile, you are looking for the ability to make some form of bell-shaped curve. This is a normal distribution, and this occurs when you think about what's happening behind the scenes in the auction. This occurs through the normal acquisition and distribution, or the letting go of inventory. So if I'm a buyer, I become a seller. If I'm a seller, I become a buyer. And as I buy and sell and I take profit towards the edges or further away from fair price, more participants or fewer participants are willing to trade. So the further the market gets away from fair price, the less participants are willing to trade. And that's how we get this curve. And I'm telling you, it just it happens for not every, but most distributions. And when it doesn't happen, like we talked about yesterday, we got about 4 minutes here. It tells you when you don't see the distribution building, it tells you there is weak structure in that area. Likely going to be a trend. You're likely going to see momentum dots. on your print, on your order flow chart, you're going to see momentum dots pushing either up or down through that area. And what you need to understand is that when price comes back to that area, it's likely to fill that area out and spend some time there. Again, high volume areas are considered fair prices. Low volume areas are considered unfair prices.